Jane Foley of Rabobank writing, we have not been forecasting a continued slide in the dollar's value next year. Jane joins us now for more. Jane, welcome back. Only 6 months ago, we were talking about sell America. The dollar trade is over. A dollar bear market is upon us. And you and I talked about this. So much of that was the first half, the first quarter of 25. What do you expect 26 will bring?
Well, you know, that's a really good question, because I think many people are still surprised that if you look at the second half of the year to date, well, the dollar is the best performing G10 currency. So not only has it done well, you know, in October, where it was the best performer, it's actually a lot longer than that. And that sort of goes against a lot of people's instincts. I still have people talking to me about, you know, dollar weakness. And yes, those drops in the first 5 months really of this year were so extreme. But actually, the dollar has done a fairly good job of recovering its ground, and I think that really does question this consensus trade about you know, we're heading to 120 and beyond. I mean, the consensus is still of that view, and I think right now we need to stop and rethink. Now, it is difficult to rethink because obviously we don't have the US data, but I think that most of the weakness that we had in the first, say, 5 months of this year was really position adjustment. You know, since the global financial crisis, we've had this big increase in investment from non-dollar-based investors, a lot of it going into the S&P, into US assets. And at the start of the year, people were sort of questioning that. And I think they still are, to be fair, the diversification trade. But, you know, does that mean that the dollar can carry on plummeting? Well, I don't think it does. And I think the dollar, you know, will be a lot more stable. And I'm really beginning to question whether or not we're going to see, you know, any significant dollar losses from this juncture in.